January 10, 2025. This is the S&P 500 E-Futures Mini on the 2002 chart using NinjaTrader 8. This is what the chart looked like today. There was this big spike down. That was the average hourly earnings as well as the non-farm employment change and the unemployment rate. So that's some big impact news that caused it to spike down. And there was another piece of economic data that came out around 7 o'clock Pacific Standard, which is about right here. You see this other drop. That was the preliminary consumer sentiment and I guess the preliminary inflation expectations. So this is how I drew up the charts today. It was quite a lot of volume and quite a lot of price action today. It was kind of choppy and it wasn't the easiest read for me today. There was really one great trade, but unfortunately I didn't take that trade. I took a total of 3 trades, 2 winners and 1 loser. The first trade was early, and so as a result, I got stopped out, and then I quickly reversed it probably a minute later off of an emotional feeling of having that loss and trying to get it back. And I was able to get back some of it because it was a winning trade, but that's just a bad habit I need to break. And then the last trade, trade number 3, was a winner. It's a little more iffy as well. I'm going to get into the trades right now. This is coming off of the market holiday, which was this yesterday. It was a observance, or I guess a shutdown for Jimmy Carter. So there's really no trading yesterday. So here's what the pre-market did. It had this rally push up. It chops around. This is where the economic data comes out. This is a really huge bar. This is 30 points, so or 29.5 points, which is incredible. And as you can see, it closes in about 9 seconds, and then it continues down on this other candle, which is about 26. So this is over 50-point drop right here in about 1 minute, which is insane. So I'm not around to trade this, and I wouldn't even try to jump on this, because if you think you're going to go long and catch this on the upside, you could easily get stopped out. And I believe there's probably a lot of slippage that might have happened here. This just blasted down. Okay, so then it hits the pre-market highs and the pre-market lows. And it chops sideways, rallies up on this orange up channels. I did see the second entry long here, but it was in the pre-market, so I didn't take it. And I'm not really around most of the time for the pre-market to take this. There's a new high. It's a first entry long pullback, bounces off the EMA, and creates a second entry long. It's I would say, kind of an iffy trade because you do need to test the highs of this orange up channel, but price action does seem like it's kind of ranging. So it looks like it's kind of in this range. And at the time, even though it's pre-market, I don't know if there's a breakout pullback, but it is being supported by the EMA. So I don't know if I would have taken this in real time if this is out in regular trading hours. The market opens, it sells off, creates a new low. It's a first entry short, second entry short failure on this candle, but it's also a new high, first entry long, and then you actually push up, creates a second entry long here. So you actually have 2 key entry points helping you to justify going along. But I called it an almost trade because it's a break of the green down channel and only made 1 attempt down. I'm expecting a second push down, plus the EMA, although it's flattening, I can't discount that it might act as a resistance yet. So I'd be buying right into a potential resistance. So I want to wait for a higher low confirmation. Plus, this is only the first 3 minutes of the day. With the first 3 minutes, you already have this many candles. I can kind of tell, plus what would happen in the pre-market. It's going to be a high volume day, so this could shake me out. So I just kind of left it alone, called it an almost trade. Prices move up, breaks out of this yellow down channel, yellow up channel, creates another overshoot. No real trades here. If a second entry long here is a bad signal bar, prices then move down. Looks like it's 1 leg, 2 attempts up, and then a second leg. I drew this trend line going down. It only touches here. I'm going to go ahead and look into the future real quick because I just want to delete this. As you can see, it does confirm like 4 times, which is pretty good. There was no real setup here for me to take advantage. And then down here, it doesn't really fit that well. So I'll get rid of it as soon as I'm finished talking about this region. Sells off, it creates a new low. So first entry short. Now this is very, very close, but it doesn't actually test the low. So it's a green down channel, push, break, 1 attempt down, and it looks like it's about to start the second attempt. But it's a possible trade. The one that the thing that made me concerned was even though it's like one tick away from hitting the new low, would the market see this as achieving this downward push? So even though there's a second entry short set up here, good signal bar, it could be the possible start of a second leg down to test the low of this green. Because right now the market bias does seem to be more sideways than downward. So it's a possible trade. You'd have to be a little more aggressive because this is a pretty big bar. It's, excuse me, it's about 19 ticks, so it's rather large. So I didn't really want to risk it, but it is a possible trade if you're more aggressive. Prices move down. You don't know that this is going to happen, like this big flash down, top sideways. Moves on this orange up channel. There's this second entry short here. It's above the EMA. EMA is flat though, but it's hard to trust the EMA at this point because you spend some time below and spend some time above. It didn't really quite act as a reliable resistance or support, so you just have to keep that in mind. Now it touches a fourth time on this yellow, well, not yellow, this trend line coming down. So it does test it a fourth time, and I was having trouble finding out where this possible bottom of the channel could be, because I did have it up here at one time. Didn't quite fit well here because then it had overshoots here, so then it had it down here. But it's really hard to trust. Prices move down on this green down channel. You have a first entry long. Let me just kind of renormalize this. You have a first entry long here, technically a second entry long, bouncing off the pre-market lows. But I didn't really like this setup. There's also a new low. It's a first entry short, second entry short. The second entry short I thought was a possible trade. It's a little more aggressive because this candle is pretty large. It's 6 points, which comes out to be about 24 ticks. That is kind of large. I like that it doesn't really quite have a triple test yet. It did have a potential fail breakout if you're playing this as a range. And I was thinking it was a range at one time, something like this. But by the time it closes, it's pretty close to the bottom. And I did debate the idea that actually the range might be here. So you do have enough room to the lows. I like that it ticked one whole point above and then it flushed down and closed and engulfed this previous candle. But the risk profile is pretty huge. Even if you try to put a deep limit order up here, you're asking the market to come all the way back up to catch you and then bring you back down, which may or may not happen, but it just feels like you're asking a lot of the market. And if it does recover that much, it'd make me worried, even though my stop's up here, that I might get stopped out. So it's a possible trade. Is a little more aggressive, but I just left it alone. The prices move down. It kind of chops sideways. Then it flushes down. I have no idea why it did it. Oh, I do. This is where the other economic data came out, the consumer sentiment. So I was watching this. It flushes down. I'm glad I wasn't looking for a setup, or I wasn't really prepared to take a setup, because if you're thinking going long or short, it's hard to really know what's going to happen. Because right before this happens, you're thinking there's an overshoot, might come back up to the highs and create a corresponding overshoot. But there's no real justification to go long, but there's also no justification to go short. So when this flashes down, it's just kind of like, wow, it's a good thing I stayed out of the freight train or the path of the train. The prices move down. Kind of moves on this green down channel, break, pushes up. And this is actually where it sets up my first trade. Now, this first trade, I jumped into early and I got punished for it. So it breaks, it's pushing down, it's a new low, it's a first entry short, push up. Technically, you have a second entry short, one up, then down. So my thinking at the time was this is a second entry short, potential failed second entry long. So before this candle closed, I'm watching this, it opens here, it pushes up and it kind of moves down and it's looking like it's pushing down. Actually, I think it actually opened here and it just moved down. It never broke above this. As soon as it broke below by one tick, yeah, one tick, it's really hard to see. 62.25 to 62 even. I entered the trade. Now I entered early. This is a bad signal bar, and in hindsight, I should have just left it alone. I should have just waited to see what this one does before I even decided on a trade, but I think I was feeling a little FOMO and I jumped in early. So as you can see, I shorted here, and on the same candle, it stops me out because I kept it one tick above here. I was thinking that maybe I should have kept it one tick above here, but kept it one tick above here. And as you can see, had I kept it one tick above this guy right here, this candle still would have stopped me out. But this is the candle that I should have shorted on because it's a new low, first entry short, pullback. Technically, you have a second entry short here. Second entry short, but this is a better second entry short because this is a bad signal bar. The trigger bar isn't good. This is a kind of a better visual second entry short. I should have taken it here. It also has an EMA rejection, and this is actually a trade to have taken, but I took this loss, was kind of, I wasn't saying shock, but I was kind of mentally not there anymore. So as it's going down, this is at 7:05 Pacific Standard, and as you can see, I took another trade at 7:07 or 7:06 Pacific Standard, and this was a knee-jerk reaction. So I saw this pushed up, it's coming down, one attempt down, second attempt down. I saw this as a lower high, and that's all it really was because it's just a lower high, but I jumped in because it is confirming the prices are moving down, but their low of the day has already been made right here. So I'm shorting into the low of day, which is rather dangerous because there's no clear justification to move up, a clear justification that it would go down, except for this lower high. So I jumped in, and there's not even that much room for a scalp, for a scalp. So I jumped in here, it pushes up, almost stops me out because I'm one tick above this guy, and then I was able to get my quick, in this case, 2 point scalp, but I shouldn't have even been going for 2 points. If anything, I should just decide to get out break even or even just 1 point. But this is a bad emotional trade after the loss here. And I fall victim to that often because I need to just take the loss, reset, rethink before I take another trade. But this one was so early in the process that I was kind of like thinking I shorted here and I lost on it. I'm without clear justification. I just thought, well, I'm right. So I took it a second time. And this is a very lucky trade because it could have easily stopped me out. And I have two in a row. And that is ripe territory for me to get triggered and go on tilt. So after seeing this, I realized, even when I took the trade, after I took it, I realized like this is a really bad idea. Emotions got the best of me. So then I was just sitting, prices moved down. EMA is holding prices down. No clean setup. You do have a new high, first entry long. You have technically a second entry long. It's a doji. Nothing really attractive about this setup. Kind of moves sideways and it starts pushing back up. As you can see, this trend line doesn't really help. So I'm going to go ahead and delete it for now. You just know it's moving down for that channel. You do have a trend line here, but you don't really have a good clean channel. Now as prices are moving up, nice yellow up channel, no clean second entries, nothing that particularly looks safe. Pushes, hits this consolidation area. Again, there's no clean second entries. EMA is starting to show support because it had one touch here and a bounce. Has a second touch here and a bounce. Unfortunately, there was no clean setup. You could argue there's a new low here. First entry short, second entry short failure because it has a good bounce. This candle is 10 ticks. So you could have maybe argued for this as a trade, but I just didn't really like it. And prices move up. It's still moving. It's still respecting the EMA. Now it touches. So I'm watching first entry long. I'm hoping for a second entry long somewhere here, bounce off the EMA, bounce off this yellow up channel, but you don't get it. Now the second entry long is down here below the EMA. I'm not interested in this. It pushes up, break of this yellow up channel, tests and makes a new high. Technically you have a new low, first entry short. You technically have a second entry short here, but it's not really a good signal bar. I don't want to go short on a clearly bullish bias, even though the uptrend potentially is played out. I need something more solid. I would need a second entry long to confirm that it's moving and continuing back up. It doesn't do that, breaks through the EMA, so I'm no longer thinking going long. The first entry long here, technically I have a second entry long here. It's a bad signal bar out in the middle of nowhere. No good context. And then this actually sets up a really decent trade. It's a new low here. It's a first entry short, pullback, has an EMA rejection. I saw this as a spike and then a lower, more shallow channel. But this channel, I really only trusted the trend line going down. 1, 2, 3, maybe 4. But I like that it touched the EMA and it flushed down. This is a little bit larger because this is like a 14 tick candle, but I like that there's enough room to the bottom and it looks like a very solid signal bar. I thought it was a pretty decent trade. If you entered here, even for 2 points, you would have gotten filled. And I think, yeah, you really wouldn't have exited this trade yet. Actually, you would have. 73, do you need to go down to 71.50? Yeah, this would have been a quick scalp. Unfortunately, I wasn't on it. And then you have this one as a lower high, but the lower high is already pressing toward the low. So I wasn't as interested in this lower high. Prices continue moving down, falls into this yellow down channel. Price is looking pretty good. Then it starts moving sideways in the sideways consolidation. This is actually where I take my third trade, and it wasn't even the best trade. So it's a break of this yellow down channel. It breaks, makes one attempt down, made a second attempt down. So it already technically tested the lows of this yellow down channel, but it's also following into a range now. At the time, I was thinking the range could be up here. This could be a failed breakout. Came back up. Technically, it's a new high here. It's a first entry long pullback, second entry long. Second entry long has failed. You also have a new low, first entry short, second entry short on the same candle. Spiked up once, pushed down, closed at the low, engulfing this previous candle. So I saw this. That was my justification. I saw two key entry points. EMA is still holding prices down. There's a small violation here. So I said, I'm going to go short on this. It is a very risky and aggressive trade because, as you can see, I entered one tick below. And even for 2 points, I had to move from 58, 60, 50. So I need to go from 60, 50 to 58, 50. And I was able to get out 58.50, but as you can see, the localized low right here is already at 59. So in this case, I likely should have just gone for a 1 point scalp because this is an iffy trade. And even this iffy trade, going for 2 points is a little aggressive because I am potentially running into low of this range. And as a break of this yellow, first attempt down, second attempt. So by all means, the downtrend might have played out. It could be starting a correction and reversal back up. But I was lucky on this trade. Got out at 2 points, and then I moved my runner from up here down to one tick below this guy. And unfortunately, my runner got stopped out. It kind of chops around and it continues back down. At this point, I also realized like how lucky I was on trade number 2, and trade number 3 should have really been 1 point scalp. And I went for 2 points. I got rewarded. That's when I knew, okay, I need to I guess, slow down my thinking and be more patient because I'm getting sloppy. This is sloppy trading at this point. So I decided to take no more trades for the day and just kind of sit and watch. The prices have this failed breakout, pushes down. Technically, you have a new low here. You have a first entry short, just barely, touching and making a double bottom, but doesn't. And it makes a second entry short here, technically, but and it makes a third entry. But I also saw its new high, first entry long, second entry long, second entry long failure. And I consider this a lower high of the second entry short. New low, first entry short, second entry short, then a lower high. Didn't break above this guy, but I just didn't really like this setup just because there's no room before the localized low. Even though it has been trending down, it's kind of stabilized. It could be a bottoming pattern. So I could be potentially, what I was thinking is I'm in a range. So this red line here is the low of day. It could be the bottom of range, and it could be about to reverse. So I saw it called almost trade. In this case, it would have worked, but of course you don't know that. It reverses on the screen up channel. It's a first entry long. Technically, you have a second entry long here. I saw it, I think it was just more iffy because it's a break. First attempt up. This could be the second attempt up. EMA is holding support, but unlike here, where it's acting clearly as resistance, now its prices are moving above and below it. So it's harder to trust this. So I'll go ahead and mark it as a second entry long, but I really didn't like it. So prices then continue moving down, pushes down, tests the low of day, continues downward, break of the green down channel, tests and makes a double bottom, clearly a new low, hits this consolidation area, moves up on this orange up channel. There is like a lot of jumbles. Like from here, you have a first entry short, and that's all you really get. And it breaks above. You technically have a second entry short here, but this doesn't look like a clean setup. I just didn't really like it. You don't know that's going to do that because this would have shaken you out because you're thinking, okay, first entry short, break of this orange up channel, tested the highs, maybe it's going to continue back down. You have to keep in mind that this green down channel has tested the low. So down channel might have played out. It could be one leg, pull back, second leg. So when you see this in real time and you see this big push down, if you were to jump short right after this candle, that's just gambling. You would have gotten a scalp, but then the next one probably would have fooled you into thinking, oh, wow, it's a good follow through. I'm going to go short here. Depending on how many ticks you're going, how many points you're going for, it would go back up and probably reverse on you. So this is just kind of this weird garbled price action right here. So new low, first entry short, second entry short. It's far from the EMA. I'm not really clear what's going on. Prices are moving up. Later, I established this green up channel, but there's still no clean second entries. Breaks out, hits the sideways consolidation. And I saw this as a new high, so first entry long pullback, second entry long. Second entry long, I thought this is a possible trade. It's a break of the green up channel. One attempt up. This could be the second attempt. I really wanted this close to be at least matching the open here or matching the highs here. But it is a possible trade because it is bounced off the EMA, decent signal bar. In order for me to want to take this trade is I would probably wait or set it back a little bit just so I have enough room to scalp out before this potential top of the range. So depending on where I set my trade, I don't know if I really would have gotten filled or even got the scalp. Then prices move up, bounces. There's clearly a channel moving up now. I kind of abandoned or left this green one now and I established this yellow one. Prices move up. The yellow one was actually a little tighter previously. I had it here because it fit pretty well. Then there's this overshoot, long dwell outside, and it kept going. So then I didn't really like having the overshoot, so I kind of brought it together and made it part of this line. But what's more reliable is the support of this yellow up channel. Prices continue moving up. It's a new high. It's a first entry long, pullback, second entry long, no clean setup. We also have a new low, first entry short, second entry short. Second entry short failure, but then it's really close to this key entry point, but there's no clean setup that I particularly like. And then it's starting to break out of this yellow up channel. And that's where I kind of drew and established this. I'll just make it the purple up channel for now. Because they kind of fit. Then it broke out and broke through. It's moving down. This is the pre-market low. Pre-market low, pre-market high. It didn't really matter that much. I'm going to go ahead and delete it because it doesn't really come into play. Let me just double check. Yeah, it doesn't really come into play, so I'm just going to delete it to make discussion easier. Break this green down channel, makes one attempt, pull back, second, and then it makes a triple test here. I thought this is actually a possible trade because I like that this one touch, two touch, three touch. Each time is one tick lower than the next. It is a new low. It's a first entry short. Technically, you have a second entry short right here. Second entry short and a triple test and a potential lower high right here. I thought this is a decent trade, and unlike previously, this is one of the few candles that are really small. This is only a 7-tick candle, so the risk I think was worth it. Even though there's no EMA rejection, I think I would have put my trade right at the lows of this guy, and then put my stop at the highs of this guy. So as you can see, I would have gotten filled, and it likely would have gotten me my 2-point scalp. Pushes down, then breaks out, potential fail breakout, first entry short. Technically, you have a second entry short here. This green up channel has retraced too much for me to think it's going to test the highs of this. This green down channel has made one attempt down and it has tested the low, but it's kind of in a range now. Potential fail breakout. This green down channel here needs to test this low. So it broke, and you have a second entry, you have a new high, new low, first entry short, technically a second entry short. In this case, it would have worked, so I'll go ahead and mark it as second entry short. As the EMA rejection, top of the range, enough room to the lows, good signal bar. Kind of chops around sideways. Breaks out, kind of corresponding breakout here and here. I'm expecting a big move down, one leg, potential two legs, and then another big leg like this down. So that's kind of where I established this guy here. One big leg, and I'm expecting another big move down. There's a new low, first entry short. Technically, you have a second entry short triple test. Well, actually, it's a third entry short because you have a new low, first entry short, second entry short, third entry short, top of the range, maybe. I'm looking for a lower high. You don't really get a lower high. It kind of bounces back up. New low, first entry short, second entry short. Second entry short is just kind of in the middle of this range, so I'm not too excited about it. Then it pushes down, breaks out. So I'm thinking I'm just going to see a second leg down here now. It kind of pushes down. It does make the measured move, move sideways. It's a new low, first entry short, second entry short, technically a third entry short. It's kind of sitting on my hands now. Well, I'm sitting on my hands anyways because I'm not taking any trades, but I'm just watching. Prices move down. It starts moving back up. First entry short. Technically, you have a second entry short. Second entry short here it engulfs, but when I see something like this, in order for me to, and it already made the measured move and then some, I'm not that eager to take a short just yet. If it has a lower high, I would consider it. But you don't really get a lower high. It just kind of moves down. I'm thinking I'm in a range now. There's a new high, first entry long, pull back. Technically, I have a second entry long, but it's a very weak setup for a second entry long. It gets very jarbled and actually just kind of moves into the close. This is the last 10 minutes where you don't really want to be trading this because it just gets noisy. I know how I saw the charts today. It was a lot of price action today, a lot of movement. Unfortunately, there wasn't that many setups I particularly liked. All three trades that I took today probably should have just been avoided altogether. The first trade was early. Now, if the first trade I had just been more patient, I think this one right here was the candle to enter on. It would have been a first entry short, second entry short, technically a third, but this is the better setup. Visually, it's one leg up, pull back, second leg, and this is the one that should have taken. This one should never have happened. It was a knee-jerk reaction, emotional. This one was a decent setup, and then this one wasn't the best either because I entered right into the lows of potential range. I should have definitely not have reached for 2 points, but maybe just one. That would have been at least more acceptable than pushing for the two, because as you can see, my exit was below the localized low. So another learning experience, another day. Definitely know that I can still get triggered and go on tilt. So thank goodness the weekend's coming up should let me clear my mind a bit because this week has been a little bit funky with the break in the middle and there's some things happening. So hopefully that was helpful.